3% comp sales growth. Bloomingdale's, with your old job, which you used to run there, phenomenal 10% comp sales growth. And the turnaround that you've been trying to execute for the Macy's brand seems to be really taking hold. 1.5% growth there. And I think if you just take the stores that you've remodeled, you're over 2% there.
Correct.
This is now, what, 4 straight quarters of this?
This is 4 straight quarters of growth, 5 quarters of beating our guidance. 10.2% growth, you mentioned at Bloomingdale's, 2.4% growth at the reimagined stores. We feel like we are on the curve of beginning to transform the Macy's Inc. portfolio company.
The conversation was a bit different even a year ago. I mean, people were writing your obituary, the Macy's obituary. They were writing the department store obituary. Is this turnaround just about a better experience in the stores, or is it about something different that we're not really picking up on?
Well, I never bought into the extinction of department stores. I think it's bad stores don't have a place in the retail ecosystem. Sometimes they can survive longer than they should. Great stores people love. People love Harrods, they love Selfridges, they love their department stores. We're a department store, we do a really good job. When we do, we get credit from the consumer. When we don't get credit from the consumer. So I really just took it internally and challenged our team to say, let's satisfy the customer. Let's put people back in the stores. Let's update the product mix. Let's do a little storytelling on the visuals. How about some help in the fitting room where the customer's craving support once she's taken her clothes off and is looking to figure out what size is going to work for her.
So customers seem to be a little bit more excited about what's going on. I am curious about the brands, the vendors, the things you sell there. Are they also excited? I mean, are you seeing more interest from brands that maybe had left the Macy's ecosystem in the past and maybe are knocking back on your door?
Yeah, we've talked about new brands coming in, Donna Karan Weekend, Rothy's new to both Macy's and Bloomingdale's, the addition of Ted Baker and Theory and Reese. Bloomingdale's certainly big luxury expansion. So I think the brands we're looking to see, are you ready to take care of the business? Will you be accretive to my brand positioning? Will you help me to reach customers I can't reach without your support? And I think the team has done a good job of explaining that. Macy's 38 million active customers. That is not easy to buy in the media market. So how do we make sure that we're presenting our brand in the right way so that we're capturing new customers, that maybe we're the first time that they're learning about our brand, and that we're proud of the level of business we do?
I am curious. One of the big criticisms of your Bold New Chapter, your turnaround plan, is that you're basically shrinking. The idea that you're leaning too heavily on Bloomingdale's, which is obviously a success story. And there are a lot of people that want to know, is this sort of a big structural shift for you with regards to what Macy's Inc. overall is going to be? Is it going to be weighted more towards luxury and Bloomingdale's, or is it going to be the complete sort of ecosystem, Macy's, Bloomingdale's, and Bluemercury?
Well, it's a 3-part strategy from the very beginning. The first chapter of Bold New Chapter was strengthen and reimagine Macy's. And while we had to close some stores, we still have a few more stores to close, the primary focus was reimagining stores. I think when you and I talked the last time, I said a strategy is not a strategy if it's just about closing underproductive stores or monetizing assets. The strategy is making it better for the consumers. So we put more people in the stores, we added more inventory, we brought in new brands, we made the website more inspirational. But the second part of the chapter is to grow Bloomingdale's, because why wouldn't we? We own Bloomingdale's. It's a great brand and has so much potential, organic potential, physical potential, digital potential. And then the third piece of the strategy was to make sure that we were operating efficiently and effectively and serving the customer. So I'm proud of the fact that the supply chain team, we're in stock better, we're flowing inventory to the customer faster, we're having less issues with the consumer. That's why our net promoter scores, how we measure customer service, are going up.
Bloomingdale's growth, there are some people that said, certainly in the most recent quarters, has benefited partly from, let's just say, the relative absence of Saks Global, Neiman Marcus, Bergdorf, Saks. They're in bankruptcy proceedings. They are expected to come out sometime this year. And I've spoken with their CEO, and he's got some pretty ambitious plans for what he thinks Saks can be. Does that potential increase in competition worry you with regards to Bloomingdale's trajectory?
No, I'm focused on Bloomingdale's. I'm focused on Olivier and his team.
You don't go into Saks?
Oh, I certainly shop the competition, but I'm focused on what we do. I learned a long time ago, if you depend on other people failing for you to succeed, you're not going to get very far. Our focus is on delivering a great experience for the Bloomingdale's customer. You and I could go over and walk 50 Ninth Street across the street from this great building and see new brands. brands, great people, great visuals, inspiring marketing, 40 carats yogurt. There's so much interest within the Bloomingdale's brand. Does competitive missteps help Bloomingdale's?
Yeah.
Of course. But if Bloomingdale's wasn't running effectively, wasn't healthy, and this strategy started a number of years ago as we added new brands, as we declared our right and reason for being at our 150th anniversary in 2022, we said, we can do better.
Yeah, also just as a personal note, they had a Sun Life pop up there, by the way. You need to get that back. It was only temporary. In all seriousness, I do want to ask you about just the consumer overall.
Yeah.
I mean, it's one thing to say, okay, your business is doing great. There are certain things you control. You don't necessarily control the economy. Gas prices are significantly higher than where they were 3 months ago. Most economists don't think they're coming down anytime soon. You already had a consumer, as you have characterized in the past, as being kind of a K-shaped or even E-shaped economy here. Do you see the state of the U.S. consumer improving anytime soon?
I think the consumer is going to continue to buy rewards and things that they can enjoy, find a way to escape. We talk about retail escapism or retail therapy. And the gas prices being higher is not helpful to the business. There's no question. But it's not an excuse to not do business. Every single day, we are doing business at Macy's and Bloomingdale's and Bluemercury. How much business? How do we take business from the competition? How do we inspire you to find things? So if we have a new brand in sunglasses, if we have a new Hoka sneaker, if we have a new pair of Page denim jeans, there's a reason for you to buy. And by the way, we're actually accessible luxury. We are in categories that, for the most part, our core customer can buy multiple times without putting a dent in their wallet.
Just a reminder for our Bloomberg audiences on television and radio, speaking right now with Tony Spring, the CEO of Macy's, Inc. And with regards to that, though, Tony, are you able going to hold price? Because part of the success of Macy's isn't just the comp sales growth, but it's also been on the bottom line as well. To avoid having to heavily discount if we are indeed seeing economic pressures out there.
Well, I think it's our job to manage the bottom line. It starts with first the top line, delivering a right experience for the consumer. If we have the right brands, if we don't overbuy the inventory, we're going to be fine on the bottom line. Last year, we had to navigate the uncertainty of tariffs. What country we were going to make products in, how we're going to adjust orders, how much of the cost was going to be shared by the vendors versus shared by Macy's versus shared by the customer. This year, we can be focused on taking care of the customer. This year, we can be focused on what are going to be the impacts of some of the macro and geopolitical issues.
But you bring up tariffs. I mean, I thought the tariff thing was behind us, and then yesterday we had news here on Bloomberg that the Trump administration is kind of re-upping a lot of those tariffs.
But it's not last year's tariffs. And I don't like tariffs in general as a policy, but we accept what happens. They're not the high rates and inconsistencies country by country. You had people moving production from China to Vietnam and back to China again. So that's not going on this year. How much opportunity cost did we lose last year because we weren't focused on the consumer, because we weren't focused on taking care of the customer? I'm excited about the opportunities this year. I walked through the Father's Day assortment. We look terrific. I looked at the World Cup assortment. We got lots of fun jerseys, and we got the Knicks in the playoffs. So it's like there's so much opportunity for us to do business and play into fandom, I think, that exists in every family.
Are you a Knicks fan?
I am a Knicks fan.
Okay, well, congratulations. I'm a Bulls fan, but I still wish you the best here. I am curious, though. Recently, and I know it's a small investment, but we had the disclosure from Berkshire Hathaway that they had taken a stake in Macy's, a relatively small stake, but it was significant because it was, I believe, the first stake that they've taken in a department store in decades. What does that say to you? Not just with what Berkshire and Warren Buffett might be doing, but just overall, the confidence that maybe might finally be returning to Macy's, Inc. as a stock.
Yeah, my father used to call it a shot in the arm, and we all need them every once in a while. We love all of our investors. I think Berkshire just has a wonderful reputation of believing and investing for the long term, and I think it's a proof to our team that doing the right things, even if you don't see the immediate success, they will be beneficial over time as long as you're honest with yourself. I have an adage about the garden. Sometimes you plant seeds and you want to go pick the fruit. It doesn't work that way. If you believe in what you're doing, you have to take the time. You got to water, you got to till the soil. Some things we do are going to take a little bit of time. I believe this strategy is the right strategy for Macy's, Inc.
You came into this job as CEO of Macy's, Inc. with this bold new chapter. It's a 3-year plan. This is basically the 3rd year. I am curious if you can look ahead year 4 or 5 and beyond, and maybe articulate what you think that next chapter, if you will, to use the analogy, might actually look like.
Yeah. I think it's going to include more brands. It's going to include more reimagined stores for Macy's. It's going to include new ways of incorporating AI into powering a bold new chapter so that we're able to be ahead of the consumer and be able to deliver more of what he or she are looking for. I think it's going to be that continued expansion of Bloomingdale's, because with only 14 of the top 50 DMAs in the country, there is plenty of expansion potential for Bloomingdale's. And it's going to be making sure that we continue to stay focused on the customer. Because sometimes when you get distracted by a problem, an opportunity outside of the business, you stop taking care of the people that make the everyday business happen, which is the consumer.